What's going on, guys? Welcome back to the Good Success Podcast. I'm your host, Josh Culler, and today we have a special episode with a special guest. His name is Roger Blankenship, and before I get into it, I'm gonna tell you how we met this guy. It's an incredible story. First of all, Roger, it's awesome to have you on the show. I've been looking forward to having you on the podcast since I met you. And it's a really funny story how we met you, but it's awesome to have you on the podcast. And we were actually on your podcast, which I'll have you talk about in just a second. It's actually a radio show, not a podcast, but awesome to have you on the show. And we're going to have you on several other times, I promise you. So it's okay. Good to see you in person. And well, not in person. We're actually on a Zoom call right now, but it's kind of the same thing, right?
Glad to be here. Thanks.
Awesome. So the way that we met Roger, so we were actually at the Think Realty event in Atlanta about a month ago. Where's time gone? It's insane how fast time's going. But we met him so he stopped at our booth. And right off the bat, he started talking to me first. We also had Jared Stoltmeister. You guys have heard him on the podcast before. He's our sales representative for Good Success. But he stopped by our booth, and right when I started talking to Roger, I knew that something special about this guy. Like just the way he carries himself, very humble. And right away, he kind of started asking about our company. He's like, "What do you guys do? Tell me what you guys do." And he didn't talk about himself at all right off the bat. And I was like, okay, that's pretty impressive, because every other person that's come by our booth has said who they are, and then they ask what we do. And so I'm like, all right, there's something special about this guy. So we started talking, and I told him that we're from Northwest Indiana. And so he asked, well, what part of Northwest Indiana? So we told him, and he said, well, I played basketball, and we played a school up in Northwest Indiana. And I was like, well, what school are you talking about? Because, I mean, I've lived here all my life, so obviously I would know who the school was if he played them. And so he said, Hammond Baptist. I was like, oh, what? I went to school there. I went to high school. That's my school. I grew up there my entire life. They played basketball. Obviously, we were in different eras, though, Roger. But not slightly. It was close. But
before you were born.
That's awesome. But yeah, so that's how we met. And so it was a very small world. And I was like, instantly I was like connected to you, because I'm like, man, that's awesome. You played against my school.
To be clear, I didn't play for Hammond Baptist. I played for a school from Kentucky that played against Hammond Baptist.
Right, correct, exactly.
And that was 1974.
Wow, man.
Back when your dad was still a young man.
I'm not sure if he was born yet. He was, but he was a younger man. But anyway, but that's how we met. And so we instantly clicked, and I got a little bit of Roger's story, which he told not in too depth, but we only got about 15 or 20 minutes with him. But from what I heard is incredible. And I'm super excited to have him. He's actually going to share a little bit of that today on the podcast here. And we are going to be looking forward to having him at the mastermind in February. So Roger, before I get into the podcast here, I'm going to mention about our Good Success Mastermind, because that is our biggest product right now. And so you guys, we had our fourth quarter mastermind of 2017 just ended a couple of weeks ago. So if you guys missed out on that, make sure you check it out for February's events. It's going to be February 7, 8, and 9. We are actually hosting the event in Dallas this entire past year, the 4 events that we had this year were hosted in Chicago, local to us, but we're actually going to host the first quarter for February in Dallas. And so we are super excited about that. You guys go to goodsuccess.com/mastermind to check that out. And we have an incredible group of people, an elite group of real estate investors across the country that joined this group. We had a really good turnout for the August event. We're excited about February and excited about having Roger there. He says he's going to come, so I'm going to hold you to that. And I'm putting it on the podcast right now. So you're held responsible for that. So
all right. Calendar.
Yeah, exactly. Yeah. So you guys go check it out. goodsuccess.com/mastermind. You can see more information about that there. Sign up. You guys got to fill out an application. We have a whole process for that. We don't just let anybody in the room. We got to make sure that you guys are adhering to our core values, to your character is how it fits the room and everything. And then also obviously the number of deals that you're doing and the value that you would bring to the room. So without further ado, Roger, let's go ahead and get into this. So I'm going to do kind of like an interview style. We have done this a couple of times before. It's not the traditional Good Success podcast format, but it is very useful in certain situations. And I really want to get your story out to our community. And so I got a couple questions here for you. So Roger, we have the first question here is you have a radio show called Flipping America, and you're actually in Atlanta. So I'm going to have you talk about yourself just a minute. But we had Tom Olson on your show, and we just recorded that just recently, right before we're recording our podcast now. And so if you want to tell us a little bit, if you want to start off with who you are, you're from Atlanta, what you do, and then I've got a couple other questions about the things that you do for a living. And so Flipping America radio show, tell us a little bit about that and a little bit about yourself in addition to that.
Okay. Well, I'm Roger Blankenship, and I am the voice of Flipping America, and I teach people how to make money in real estate. It's taken me several years to finally figure out how to say that. When people walk up and say, "Hey, what do you do?" I'm the president of blah, blah, blah company.
Yeah.
So what? That doesn't really tell anybody what you do. So what I do is I teach people how to make money in real estate. Awesome. And Flipping America, the show, is syndicated on multiple AM/FM stations around the country, plus on several websites, including our syndicator site, AM/FM 24/7. And we're on Spreaker and a few others, Mixcloud and different things like that, things I'd never heard of. Mm-hmm. And then we, about 3 months ago, we were accepted by iHeartRadio to be on in their network. And they put us up as a podcast. So we're broadcast and podcast now.
Awesome.
And you can listen to several back episodes of the show on iHeart. And since we're actually not in most of the country, that's the easiest way for most people to find us.
Right. And that was going to be my question, is how could somebody that's not in the Atlanta area find you guys? And so iHeartRadio, they just type in Flipping America radio show.
Yeah. Okay. You just search Flipping America and the logo will come up. It's red, white, and blue. And the A and the second A in America is flipped upside down, for the logo purpose.
Awesome. Yeah. Awesome. So you guys go check that out. Flipping America, go to iHeartRadio or iHeartMedia. That's more correct to say now is iHeartMedia, right?
I don't know. I just put iHeart.com.
There you go. Something like that. So you guys go check them out, Flipping America. So that's the radio show. That's what we're going to be on. So you guys can listen to that and go check that out. We'll have Tom Olson on his show. And when is that one going to air, Roger?
I'm pretty sure Tom's going to be on Saturday.
Okay. So this Saturday.
No. If I get the recording back, I'm going to put Tom tomorrow.
Awesome.
Our good friend, our mutual friend, Gary Harper, is going to be on Saturday.
Oh yeah. Gary Harper, you guys interviewed him too. So that's fantastic. Gary's in our mastermind and he's a big part of our community, but so awesome. So by the time our podcast goes out, which will be this Saturday, the podcast for you guys and the radio show will be aired for Tom Olson that we had on there with you guys. So awesome. So the next question I have, so you have a company called Whitestone Investments. So tell us a little bit about that. I read up on an article that was online, and you guys started in 2002. You have bought and sold over 800 properties. I don't know how old this article is, so you may have exceeded that number now. But tell us a little bit about Whitestone Investments, how you got that up and running. And then more curious for me is how you guys got through the real estate collapse. So obviously you started the company before the 08, 07 stuff. So tell us a little bit about it.
All right. Well, people ask me how I got into real estate investing, and I usually tell them by dumb luck and sheer desperation.
That's a way to do it, huh?
I made it to 40, and I'd spent all of my life working in various nonprofits, mostly Christian ministries, and they were all small startups, and I realized I'd never really put anything away for retirement, and I didn't want to live a completely irresponsible life financially. So I started thinking about what to do and was having lunch with a friend, and he said, "Hey, I went to a seminar." And I said, "Yeah." He said, "Yeah, it's about real estate investing." I said, "Oh, that's cool. I finished off my own basement in my house because I was too broke to pay anybody else to do it. So I learned how to do that myself. Awesome. And I'm kind of interested." Long story short, he said, "There's this thing out there called a hard money loan. We can borrow money and buy a house and fix it up and then sell it." I said, "Cool. What's it like? I mean, what are the rates?" He said, 5 points and 15%. Then I said, "What's a point?" You
don't know the terms yet.
But I didn't know any of this stuff. And when I found out what it was really costing, I thought, man, that's too much. Long story short, I called my dad up and proposed that he loan us the money at a lower rate. And he decided that he would just come in and be a partner. And so he took some money out of his mutual fund. He was invested in an indexed fund, and he didn't understand the stock market. He had sold his business and was just trying to live the good life in South Florida, you know. He took some money out of that, came up, we went to the courthouse auction, and we bought 2 houses. And I'm telling you, it is embarrassing what we did not know about what we but we actually sold
Hey, you
one
got
of
to
them.
learn one way or another, right?
Hey, yeah, right. The School of Hard Knocks. But we
Exactly.
sold one of them 3 months later, and on his $85,000 investment, he made $5,000. I also made $5,000.
Awesome.
And for someone who had really never made more than $40,000 in a year, that's a lot of money.
It is. Yeah.
And so I was excited. My dad went back home, went to the Hardee's on Tuesday morning, or, the local Liars Club, where all the old men get together and have breakfast. And he told him, hey, I put $80,000 into this house, and 3 months later I got a check for $5,000 plus I got my $80,000 back. And all of the guys said, well, where'd you do that? And he said, my son is this real estate genius up there in Atlanta.
That's awesome.
Yeah. And I'm thinking, I look back at it now, I realize what unsophisticated morons we were. It's amazing that we made money because what we didn't know would fill books. But the next thing I know, his friends are calling me and saying, hey, I got $100,000. I got $500,000. Would you invest for me and split the profits? I said, sure. And those guys and their money, that's how I did my first 500 deals. It led to a full-time thing. And right before the crash, we bought 2 subdivisions. Right before the crash.
Wow.
I was getting really overconfident at the time.
Oh, geez. And this is in the Atlanta area?
Yeah, in the Atlanta metro area. Yeah, one right in the city and one a little bit north in a lake community north of town. And I know you're going to get to questions about the crash. Maybe I'm getting ahead of myself.
No, go ahead. That's what I want to know, how you guys got through it.
Well, yeah, we had done a few hundred flips, and we were buying mostly foreclosures at the courthouse auctions at the time. And we'd branched out into doing some other things, and everything we did went well. I mean, it was amazing. We just made money. It was easy to make money in those days, but we decided to buy these subdivisions, and that's when we got our first hard lesson in what not to do. Don't buy an asset that you don't know about unless you've got a mentor or a coach. And, we bought them in late 2006. Ugh. And in June of 2007, 200 mortgage companies closed down and the crash was on. Most people said it started in 2008. It actually started in June of 2007.
Right.
And at the same time, one of the counties on the south side of Atlanta where we lived lost its school accreditation, Clayton County, Georgia. And as soon as they lost their accreditation, public schools lost their accreditation. It was a remarkable thing, remarkable incompetence on the part of the educators for the state to take away their accreditation. Well, everyone who cared about their children immediately wanted to move out of Clayton County. Yeah. So the crash was on. Clayton County lost their accreditation. I had 2 subdivisions where we couldn't get a house out of the ground, and we were losing about $50,000 a month in interest, and I had 13 houses in Clayton County.
And you're still standing right now. Like you're still alive.
Yeah.
Somehow.
The long story short is we lost about $750,000 in those subdivisions.
Wow.
And all of it just interest. We'd been making money and saving it and making money and saving it and putting it away. And when we bought the subdivisions, my dad came in with some more money to help make it all possible, and we lost it all. Yeah. And on those houses in Clayton County, we had to sell them basically for what we had in them. So I went for about 18 months with no income. Wow. And things got really tough. It was, I don't want to make light of it. It was a difficult situation, and we are fortunate that we made it through, really. I consider it a blessing from God, but boy, was it challenging. And we had reason and cause to go after someone legally during this time to try to recoup some of the losses. And I spoke with my dad about it at length, and he said, you know what? I've lost $500,000 before, and I have confidence in you, son. You'll make it back. Wow. Well, I didn't know how, but from 2008 to 2012, we kind of set the world on fire.
Yeah.
Because there was no one buying properties out there. I still had sources of money to buy the foreclosures, kind of our core business. And so we decided we would just try to make it back. But within a couple of months, I'm going to the courthouse steps to buy, where usually there are 15 people bidding against me for these foreclosures. There was no one.
Wow.
I went one day with some money from investors, and I had 25 houses on my list that would have been great deals. I bought the first 7. The rest of them went back to the bank, and there was no one to buy it. So
No one's buying
that's
them.
when
Wow.
I decided to branch out and raise more money.
Yeah.
So we went out and we raised a lot more money, and we got
Were
serious.
people reluctant to give you money because of what had just happened? I mean, was it difficult getting money?
With some people it was, we're in the middle of a thing, but when I told them about the numbers, what happened, all over the country, banks have this incredible rate of foreclosure. And you remember the TARP bailout? You may be too young.
I've heard about it. I never really studied it or anything.
The federal government bailed out the banks with billions of dollars. And so this money was sitting in a fund, and it was available to the banks to cover their losses from the mortgage crash. But the problem the banks were having was, if they foreclose on a property and bring it back into the bank, then it's an REO, real estate owned by the bank. And if they have a certain percentage of their loans that become REOs, the Office of Control and Currency would come and start watching them. And eventually the FDIC would shut the bank down, sell off the assets, and so forth. And so in order to keep the properties from coming back to the bank, somebody at one of the banks got this idea. It turned out to be a great idea. Let's not let it come back. Let's make it available at the courthouse auction, the foreclosure auction, at a price well below what is actually owed on the house. Yeah. Basically a short sale kind of a deal. Yeah. And, we had all these sophisticated spreadsheets that were telling us, what to expect the bids to be. And the bids started coming in $50,000 and $80,000 less. Now, Atlanta was one of the hardest hit markets in all of the United States, probably because we had one of the highest rates of what, the so-called liar loans across the country. Yeah. Our market descended by 70% in some areas, the values.
Jeez, that's insane.
That's very difficult.
That's insane.
Only Las Vegas was hit that bad, and Phoenix almost that bad.
Yeah.
But so we're struggling, man. They're selling these houses at the courthouse steps for 30 cents on the dollar. Like a house that may have cost $100,000 to build, we could buy for $30,000. So when I gave those numbers out, now we would fix it up and sell it for $70,000. So it's still a great deal, but we're making money. I brought a couple of buddies in. Well, actually, one of the guys that had some money came to watch what I was doing, and he actually put up $400,000 to invest with me. So I give him props for that.
Yeah.
But after he watched me a couple months, he said, I didn't give you all my money. I said, well, I'll tell you that. He said, do you mind if I come in here and get in this with you?
He wanted to be in it, didn't he?
It's still a free country, so I can't say
awesome.
anything, man.
Yeah.
So he came and started buying, and I taught another guy how to do it, and he came, he raised some money. And so between the three of us, we started buying everything that was a deal in multiple counties on the south side. And we cleaned up some stories that it's hard to believe now. I mean, we bought a house in a country club that had $750,000 worth of loans on it. We bought it for $110,000.
Get out of here. Are you kidding me?
$40,000 fixing it, and sold it for $450,000, which was less than half of what it would go for in a good market.
Oh my goodness.
But, yeah, we made $300,000 on one house.
So that's such an incredible story, though, because you took the crash and you just made it like your own. Like you built off of that. I mean, that's incredible.
I'd really like to tell you that we made a plan for it, but
Josh, you just went. Yeah, you just went and did it.
Yeah, we just didn't give up. That's the main thing. We
exactly.
just kept on trying to put ourselves in a position where we could make some money. And then once the banks started dropping these bids down, it was a big secret for a while. And so we had the courthouse to ourselves. And even still to this day, banks that are getting pushed on their REO percentages, they will discount a bid at the steps. We see it still today because they got the idea during this time. So what they would do, to finish that thought, is they would discount the bid. They would never have to take the property back as an REO. And the loss they were taking on the loan, they would cover that spread with TARP bailout money. So they weren't losing anything.
No, they got tricky with it, didn't they?
Yeah. So
Man,
we
wow.
actually bought a house at the courthouse auction, a 3-bedroom, 2-bath, 5-year-old house, $101. When I saw the opening bid, I thought it was a misprint, but they said, no, it's $100. We're going to sell it for $100.
But you didn't say anything when you saw the opening bid. You just like, okay, this might be a mistake, but I'm still going to go.
Yeah, it was just us. So we bought it $101. We bought another house for $5,000 that we sold for $95,000. And I bought several nice 3-bedroom rental houses for less than $20,000 and duplexes for $20,000 and $30,000, prices that you'll never see again. Not in our lifetimes.
Wow.
It was an amazing time to really grow the business and build wealth. Yeah.
Yeah. So one thing we talk about a lot, Roger, and Tom actually has a full-on presentation about this, and I think we actually presented on it at the Think Real, the event that we met you at, is the real estate cycle. And so one thing that he talks about a lot is just like he gets a lot of information from people that were in the crash, like went through it, like yourself. And then he gets a lot of information about people that like avoided it completely. Like they may have seen it coming and they just got a gut feeling, so they stopped investing. And he knows several people about that. But when it comes to like your type of situation, I that's incredible that you just got right back up and just kept moving forward. And the stories that you've just said, I mean, all these houses that you talked about, that's absolutely incredible. And for anybody that's out there, I mean, another real estate cycle is probably coming. I believe, and Tom preaches it too, is that we're on the upswing right now. And so, I mean, when it comes to your market too, is it competitive? I mean, obviously a lot of people are catching back on that. Okay, I can do this. I can get in the real estate game and start investing again. But I mean, you're obviously way head and shoulders above everybody else. But I mean, is the market pretty competitive where you're at right now?
It's crazy, man. If you want to talk in terms of saturation rate or just in terms of the supply, we're at about a 45-day supply of houses, and anything under 6 months is a real seller's market. Yeah. So 45 days is amazing. I have a friend that when he finishes a rehab, he puts it on the market. I haven't tried this yet. He puts it on the market. He lists it on Thursday afternoon. He says, we'll take offers through the end of business on Friday. Monday, we'll make a decision who gets it.
Huh. Wow.
That's how fast he sells
it. Wow. That's awesome.
It is crazy difficult to find a house if you're a retail buyer here in the Atlanta market. And I've met people at the meetup groups who are coming just because they want to buy a house. They'll buy something that needs work just because they want to be in a house and they can't get one through the normal market. So yeah, it's hot. But if you don't mind, because I lived through it and I didn't see it coming and nobody I knew saw it coming, I am kind of determined. And now I feel like I have a responsibility to my listeners to stay on top of this. So I research the trends and I read the reports from CoreLogic and all of the national research services. And so if you don't mind, I'd like to share with you.
No, absolutely. Absolutely. I think this is fantastic.
Where we are. Okay. All right. What you got to do is on your left, imagine a mountaintop, and it's kind of like this. I don't know. Is this a video podcast or?
Yeah. Go ahead.
Okay. So it goes up like this, and this is right here. This is 2007, 2008. And the other side is a steep drop off down to the middle of 2008. All right. Then over here, there's another mountain that comes back up. Okay. Mm-hmm. Now, if you looked at the average home prices in every major metropolitan area in the U.S., there's this twin mountain peak thing. There was a peak in 2006, another peak. We're at a peak now in 2017 with a deep valley in 2008. How deep that valley went varies from city to city, but everybody had at least a little bit of a valley. Yeah. The Midwestern parts of the United States were the least hardest hit.
Yeah, we didn't get hit that hard. We got hit, but not that hard.
Yeah. The areas where more creative loans, we call them liar loans, but basically they're stated income loans.
Yes.
The areas that had a lot of those were really hard hit. And some of the coastal regions were pretty hard hit. Yeah. But now here's what's happening. I've looked at this chart for 25 major American markets. And in most of the markets, values have come back up to the point where they were. These numbers are all adjusted for inflation, plus about 5 to 7%. Okay. So the values on homes right now are 5 to 7% over where they were in 2008, adjusted for inflation, or 2006. Except one major exception is metropolitan Atlanta. We're still about 7% below. So we've got some room to go to get back up to where we were in 2005.
Wow.
That means that there's still room for Atlanta's market to continue to climb, even though we've been seeing year over year rates of increase by like 12 to 15%. Now, in some of the coastal areas, particularly San Francisco, Seattle, Washington, D.C., and Boston, those markets are so on fire, they're overvalued to the tune that they're maybe 15 to 20% above where they were in 2005. Okay, so they are overvalued. And by that, what it really means is that home prices have gone so high, and this is due to a lack of inventory, that average salaried people in those communities can no longer afford to buy. So when that happens, a correction is coming.
Oh, yeah.
It's inevitable.
Absolutely.
But what is the correction going to look like? Are we going to have another mortgage meltdown? That's the question that's on everyone's mind. I get asked all the time. So to answer that, we go and take a look at default rates and foreclosure rates across the country. And that data is available through a number of the research services. And here's what we're seeing. Due in part to a law that I hate. I really don't like Dodd-Frank. It shut down community banking in the U.S. But because of the tight lending regulations that are in Dodd-Frank, our foreclosure rate and default rate, defaults are what happens before the foreclosures. Yeah. Those two rates are at all-time lows, lower than they've been in my lifetime. So we have the average, the average FICO score of someone who is borrowing money to buy a house right now, nationwide, is 743. In 2006, it was 660. And so
I'm surprised it gets that high.
What that means is a lot of better loans are being made right now.
Yeah.
And the default rate is so low, we don't know if we're really at the top in terms of the foreclosure rate. I don't see a crash coming. And so after looking at all this, here's what I've said on the show many times. I believe a correction is coming in some of the overvalued markets. I think that they're going to see a little bit of a decline in price. And I see in the other markets across the country, including Metro Atlanta, we're going to see a slowdown in the rate of increase. I believe that the markets are going to normalize in most areas. If you looked at the map of the United States, and on your left over here, you saw from LA to Seattle, just draw a line from LA to Seattle. And on the right, start at Washington, DC and draw a line to Boston. Okay, those are the overvalued markets. They're going to see probably a little backing up in prices because people have already stopped buying homes because they can't afford them anymore. Mm-hmm. So the prices are going to have to get back in line with what people can afford. The rest of the country is going to see a slowing probably in 6 to 8 months, and it's going to back up to probably just a normal rate of inflation. But the thing that's keeping the market overheated right now is the lack of inventory. New mm-hmm. housing starts are off.
Yeah.
And so we've done some research into that. And at this point, it gets kind of boring because it's all very speculative about why the new housing starts have not resumed at the level that we need to maintain a normal market. Some of it has to do with labor shortages. Some of it has to do with the difficulty builders are having getting loans because of Dodd-Frank.
Yeah. No, absolutely. Man, that's some good stuff. That is some pretty deep and intense stuff. And I think you're hitting it from different angles too. And that's really really incredible. You need to come out with an article about that, by the way, like blog that or something. That's awesome stuff.
Yeah. Well, maybe I will. But this is part of the stuff that we study for the show. We have a lot of fun on the show, and we do a lot of research, and we take it seriously. Although some of the stuff that passes for reporting is so asinine, I make fun of it.
That's funny. So awesome stuff. Well, Roger, I think that's all the time we have for today. And I seriously, that was incredible. Very good stuff, very good content for the podcast. And we do talk a lot about the real estate cycle and, everything that you just mentioned, and just the story that you had going through that is incredible. That's super fantastic. So I think that's going to do it for today's episode, but we'll have you back soon. I promise you, we got to have you back soon. You're awesome. You have an awesome radio voice too, by the way. So.
Oh, thanks. I appreciate that.
Awesome. Awesome. All right. So that's going to do it for today's episode, guys. And if you're not already, make sure you are subscribed to the Good Success Podcast. We are on iTunes, Google Play, SoundCloud, and now Stitcher. Stitcher has just been released for you guys. So make sure that you are subscribed to there if you're listening on Stitcher. And then also make sure you go follow us on all of our social media accounts. We do have a lot of free content that we put out. We put out a lot of videos. We also do the podcast where we publish onto the social accounts. And then we have a lot of other content that we post as well. And then also, like I mentioned at the beginning of the podcast, make sure you go check out our mastermind. So goodsuccess.com/mastermind. You can fill out your application there, find out more information about it. We bring elite investors from across the country into one room and they collaborate. And it is for 3 days and it is just completely fantastic. We have a great group of people that are already in the mastermind, and it's going to close off very soon because we're only accepting a certain amount of people. So make sure you go check that out, goodsuccess.com/mastermind. Roger, it's awesome having you on the show.
Thanks.
You're holding up your finger. You're like, you got something else to say.
I just want to know, you mind if I tell people how to reach out to us?
Yes, I was going to have you do that. Absolutely. Go ahead.
All right. Well, we're on all the social media at Flipping America, except on Facebook, we had to go with Flipping America Media. And every Tuesday, I do a live stream on Tuesday afternoons, 2:00 Eastern, where we're touring a house or we're walking through it. There's some instructional thing there and free coaching. If you have questions about real estate investing, you can ask in the comments right there during the live stream, and I will answer them. Awesome. So that's every Tuesday at 2:00. And Twitter, Instagram, at Flipping America. You'll hear from us a lot. We post links to all of the stories that we research for the show.
Fantastic. Awesome stuff. Well, we will make sure to have you back on the show very soon. Thanks for joining us for today's episode, Roger. All right, we'll talk soon. That's going to wrap it up for today's episode, guys. Thank you so much for listening. And whether you're looking to survive, thrive, or matter, our goal is to provide the tools to reach your vision. Thanks again for listening, and until next time.